Hello. Today I'm joined by James Uphaugh, who is the fund manager of the Edinburgh Investment Trust. So, James, you took over the management of the Edinburgh Investment Trust last March. How has the portfolio been restructured? And could you briefly run through your investment philosophy?
Well, thank you, Carl. It's been an interesting period to be restructuring the trust because we did it in March 2020, that initial phase, which, if you think back, was quite a period to be restructuring the trust because it was that initial gut-wrenching phase of the COVID epilogue. So I'd say to you, evidence is what we're after. And the evidence is that actually over the period that we've been managing it, so 17 odd months, the performance is good. So the share price is up 53%. The NAV, net asset value, is up 48% in round terms. And the all share, our benchmark, is up 38%. So you can see we've got some distance, 10 percentage points between us and the NAV and the all share, and then the share price is some 15% ahead of the all share. So I think notched up some pretty good performance over the 15 months in terms of, or 17 months, in terms of the investment philosophy. So what we are is we are unashamedly flexible investors looking to implement a total return approach, by which I mean we're not over biasing our expected returns from either capital or income. We're looking for companies to sort of grow over the medium term, and as a result, the dividend to flow naturally off the P&L and cash flow statement. And to do that, we undertake, and we remember we're a pretty big team actually in terms of our analytical and fund management bandwidth at Magedi. We're looking as a team to undertake some really deep fundamental research into the companies we're investing in, looking to find 50 or so companies which we feel very strongly the expectations and valuations are supportive of it. And within that, ESG is integrated throughout. So that is our investment approach, if you like, Carl.
And over that nearly 18-month period, what have been the biggest contributors to performance?
Yeah, it's been a pretty broad spread. I mean, in the big leaderboards, you'd have the likes of Ashtead, the US-based plant hire business, which is really crunching the competition. You'd have Anglo-American, the diversified mining business. You'd have Weir, the mining technology business. You'd have Electric Components, which is a massively broadly spread supplier of components to industry and design engineers. And then you'd have the likes of Dunelm and Greggs, and I don't need to tell you what those latter two do. So what are the common feature of that, I'd say, is that each of those businesses are really emerging in a very, very front-footed and muscular way from the COVID crisis and really gaining share.
The portfolio, as you mentioned, has around 50 companies. Have the majority of those firms returned to paying dividends? And could you name a couple of examples of firms that have been staging a strong recovery in terms of their dividends?
Yeah, I mean, I'm pleased to report that the vast majority of those 50 stocks actually have returned to the dividend list. There are only two that haven't, and those are M&S and Centrica. They're relatively small holdings, but actually both of those have performed pretty well recently. Why? Because actually in both those cases, the expectations are gently firming. You may have read in the papers that M&S has had its first upgraded expectations in pretty much nigh on 2 decades. Centrica, what it's seeing at the moment is competitive dynamics working in their favour. and obviously you've got firming gas and electricity prices. So, the vast majority have returned to the dividend list. In terms of a couple of examples, well, two of our chunkier holdings, Hayes and Dunelm, I think are quite good examples. So Hayes, is a permanent and temporary employment recruiter, pretty globally based. Interesting that in the last set of results, and just to sort of zone in, and give you some sort of context, the share price is about 170 pence, let's say. They declared a ordinary dividend of 1.2 pence in rough terms and a special dividend of 8.9. So you have about 10 pence of dividend flow coming off that one. And why that is obviously you're seeing a massive V-shaped recovery for their businesses across the whole range of their global operations, such that they have the confidence to do that. Another example from last week was Dunelm. Dunelm's the homewares and furniture retailer. And here what you have is a business with a strong balance sheet, strong cash flow dynamics, and that supports a 35 pence ordinary dividend and a 65 special dividend. So that's £1 in rough terms on a share price of roughly £15. So those are two quite good examples. And I think more broadly, taking a step back, if you look at the broad complexion of the UK equity market, some of the chunkier sectors, the banks, the oils, the miners, all those three sectors, actually the cash flow and capital characteristics improved enormously. And so the net result is dividend expectations from those have firmed up a lot. So the net result is the dividend coffers are really filling up after a period where, if you like, the air's been cleared.
Link Group, which produce a UK dividend monitor report on a quarterly basis, has forecasted that it will take until 2025 for UK dividends to return to pre-pandemic levels. What's your view on that? Will it take that long?
Yeah, I think Link's a strong analytical organisation, but I think any forecast for dividends to 2025 need to be treated with a little bit of caution. And I'd say to you that assumption might be a little bit ambitious. Why I say that is that if you look at the constituents of the index, some quite big sectors such as the oils were really over distributing ahead of the crisis. And I think, as they return to the dividend list, the emphasis is on, a good level of dividend flow and buybacks for the cash flow rather than, moving back to where they were. So, I would say that might be a little bit ambitious. But what I'd also emphasize is it's my job with my colleagues to find the companies that can produce, really strong absolute and dividend flow. And that's what we're on about. We're after finding more Hayes and Dunelm. So, I'm optimistic on dividends, but I think it might be difficult to say that will be achieved in terms of what Link expects on that time frame.
James, thank you very much for your time today.
Thank you, Carl.